नमस्ते र स्वागत छ यो भ्लगमा। आशा छ तपाईहरुले मेरो भिडियोहरु इन्जोय गरिराख्नु भएको छ, धेरै कुरा सिकिराख्नु भएको छ त्यसबाट र तपाईहरुको फिडब्याक पाउँदाखेरि मलाई पनि धेरै आई एम रियल मोटिभेटेड टु मेक लाइक डिफरेंट सort of video. यो हप्ता I'm going to talk about LMI, how it's work, what's the good and bad part, and how to avoid LMI. So let's start with LMI, this new vlog. So what is a lender's mortgage insurance, LMI? If you want to purchase a property with less than 20% deposit, in that case you have to pay LMI. Lender's mortgage insurance is one-off insurance premium payable by the borrower, which is you, to protect the bank against the potential loss they may incur if you are unable to repay the loan. So let's say if the security property is required to be sold before the loan is repaid, the money received from the sales may not cover the full amount that you owe to the bank on the loan. In this case, the bank can make an insurance claim to the LMI provider to cover any losses they make. However, you are still legally responsible for repaying the amount outstanding under the loan contract because you are not protected by LMI. Now the question is how LMI calculate. So how much is LMI? This is probably one of the most important questions you should ask to your broker, because often the difference in interest rate and fees between lenders can be small, but the difference in LMI can be significant. The mortgage insurer determines their premium based on the perceived risk of the particular loan amount. The higher the perceived risk, the higher the premium charge. The premium is calculated using a percentage of the loan amount borrowed. So back to the question of how much is mortgage insurance exactly. The lender's mortgage insurance is calculated based on two main risk variables. The loan amount. The higher the loan amount, the higher the risk for the insurer. So let's say someone wants to buy a property of $700,000 and the loan amount is $630,000 compared to $400,000 purchase price with $360,000 loan amount, where the LVR is both the same, 90%. But the thing is, LMI premium will be much higher in the first example because there is much higher risk than the second one. The second is the loan to value ratio. The higher the loan to value ratio, the higher the risk for the insurer. Based on the LVR, normally there are three tiers of LMI. First, 80 to 85% bracket. Second one, 85 to 90% bracket. And third one is 90 to 95%. Lower LVR represent the lower risk and the LMI premium will be lower. As you increase the LVR, the LMI premium will be higher because of the risk factor. So LMI is good or bad? For me, this is the combination of both, good and bad. LMI allow you to purchase your own home quicker. As you know, saving a 20% deposit for a house is no easy feat. It can take many years, and if property prices are on the increase, you must save more to form 20% deposit. With LMI, you can have as little as 5% deposit. Yes, you will have to pay LMI, but in a lot of cases, it can be added to the loan, meaning you don't have to pay anything out of your pocket. In this instance, you are able to get the key to your house sooner, and you might also be able to enjoy any increased capital growth that the property may experience in the short term. LMI help you to grow your portfolio quicker. Just as LMI can assist with owning your own home sooner, it also assists with growing your investment property portfolio quicker. LMI can be added to the loan. As mentioned before, LMI doesn't need to be paid out of your own saving. Most of the lender will allow it to be added to the loan. It can be claimed back over 5 years. If the LMI is for an investment loan, it becomes a deductible expenses that can be claimed back over 5 years. You can talk to your accountant how you can do that. for me, there are few bad part as well, which is in adverse case, it protect to the bank, not you. And the second one, most of the time bank approve your loan, but sometimes because of the risk factor, LMI provider may decline it and your overall loan can get declined. So if that's the case, how to avoid LMI? If you can save 20% or more as a deposit, then you can avoid LMI. The second one is ask your parents to go as a guarantor for your home loan. And the condition is your parents should be here in Australia and their property should be here in Australia, and there is lots of condition to go. So yeah, we can cover this guarantor loan later in the future. And the last but not least, medical sector professional, for example, doctor and other selected professional, for example, CA, CPA can viewed by some lender as a lower risk of loan default than other borrower. To compete for these selected customers, some banks waive the LMI policy up to 90% LVR. That means those professionals shouldn't pay LMI up to 90% of LVR. So this is all about LMI, how it works and how to avoid it. आशा छ आजको भिडियोबाट तपाईहरुले धेरै कुरा सिक्ने मौका पाउनुभयो। आगामी दिनमा यसरी नै अरु भिडियोहरु लिएर आउने नै छु। त्यतिन्जेललाई प्लिज follow us to stay a step ahead. Namaste.